All right, guys. So today we're talking about why the stock market fluctuates. We kind of made a video about this called "What is the stock market?" but it's a little bit different, and the video quality back then was awful, and so was the audio quality. So we kind of wanted to remake it and sort of also touch on different aspects. So yeah, we're gonna basically talk about why the stock market goes up and down. What are the forces that drive the stock market to go up and down? So yeah, it starts with supply and demand. More people selling than buying a stock, and the price plummets, and more people buying than selling a stock, and the price soars. So yeah, I saw a really good analogy online actually. So if you think of it like a game of tug of war, and there's buyers on one side and then there's sellers on the opposing side of the rope. Imagine like there's 5 buyers on one side and 4 sellers on the other side. If the buyers outnumber the sellers, they would have a stronger pull on the rope, and that would drive the stock price up. That's like a really easy way to visualize it, and I thought that was a really neat way to put it. So I want to throw that in there. So yeah, there's 2 types of investors. There's Wall Street, and then there's Main Street, which could also be referred to as institutional versus individual investors. So yeah, 84% of stocks are owned by the wealthiest 10% in America. That's what you would refer to as Wall Street. And then the remaining, and this was a New York Times. This is information coming from the New York Times. I'm not just like making this up or anything. And then the other 16% of stocks that are owned by the remaining 90% of Americans would be considered Main Street investors. That's like your everyday average person. So if the market's based on supply and demand, and then the market is disproportionately controlled by the wealthy, who do you guys think has most control over the stock prices going up and down? It's obviously the wealthy, the Wall Street investors. So yeah, when you see massive trends downwards or upwards in the stock market, chances are that the people influencing it are the ones that own the most stocks, and they're able to be the driving force, really. So yeah.
Yeah, I would just say market fluctuations are basically what's known as volatility. So if something's high volatility, then it's more of a risky investment, and if something's low volatility, it's not as risky an investment. So volatility can be affected by a lot of things. It can be it could be affected by a tweet, which I mean, we saw the president send out a tweet, and then I would lose like 2% of my portfolio in a day, and then the next day it's all back. It's usually really temporary. It never lasts long. It could be affected by, for instance, the Fed lowering interest rates to 0 or raising interest rates. It could be affected by economic factors. It could be affected by tax policies. It can be affected by a lot of things, wars, national disasters. So there's a lot of things that can
for example, Tesla, when you see, Elon Musk tweeting out crazy stuff, I mean, that's a huge driving force. There's also something called a prospectus, which is basically if you own a stock, they are required to give you a prospectus every year. And in that prospectus details everything about the company, how they're doing, their earnings, do they have any debt, all that stuff. And that also affects the stock price once people read that.
Yeah, and there actually is a volatility index. It's called the VIX index. I see it all the time on shows like Jim Cramer or Money Talks or all these stock market shows. And the VIX index actually detects market volatility and measures investor risk by calculating implied volatility. It's kind of a guess, but based on historical charts, it does kind of work. It does work. So if you're concerned about volatility, you can look that up. It's called the VIX index.
Yeah, and really nobody can predict. It's kind of arbitrary whether the stock market is going to go up or down. You can't really predict it. Even like the wealthy can't just have it in their favor so that they all sell stocks at the same time. There's a lot of like things protecting against that sort of stuff ever since like I think it was 1930 something. 1933, I want to say, they put a lot of rules in place. There's things such as if you are the CEO of a company such as Elon Musk, let's use, if he wants to sell like his a good amount of his shares, he has to put in a notice like a couple months in advance. So they can't just basically rig it and drive the stock prices however they want. So yeah.
Yeah, I think pretty much to wrap it up, I would say don't worry about market fluctuations. If you know you have a good investment and you've done the research on it and you own blue chip stocks and you own really solid index funds and there's market fluctuations, don't worry about it. It's all a bunch of noise.
Yeah, let's also put into perspective that since 1940, the stock market has kept going up. I mean, I've seen Warren Buffett say something about this. Wow. There's been since he's been alive, there's been I think 8 presidents that are Democrat and 8 are Republican, and every time the stock market still goes up. So I mean, if you're investing in an index fund, you don't have as much to worry about compared to if you're investing in individual stocks. Obviously, that's a little more worrisome. You might be checking it a lot more often, but
it would take an apocalyptic event for an index fund to hit zero and you lose all your money.
As Lloyd said the other day when we had him on the podcast, if you guys want to check out that episode.
So, it's important to know that the stock market, sometimes it goes down, but it's always trending up. So don't worry about market fluctuation and just buy and hold.
Yeah, and I think that pretty much wraps it up, guys. Don't forget to subscribe and use our links in the description. It helps us out a ton. Basically, we don't make any ad revenue right now, really. So that's like the best way to help us out is use our links. So yeah.
All right. Thanks, guys.